Hello and welcome. In these short videos, I'll be covering issues like your cash flow, superannuation, insurance and government benefits. In this video, I'll be answering some common questions about insurance cover. If you're unsure about your insurance cover, you should start by checking with your superannuation fund. Most super funds offer insurance cover to their members. In fact, members sometimes receive automatic cover up to a minimum level. If you're still employed, talk to your employer about it. You might also have a recent statement from your super fund which will tell you how much cover you have, if any. If you have more than one super fund, you may find you have more than one lot of insurance cover. If you do have insurance cover in more than one super account, you should look at what type of cover these include and how much you're covered for in each one. Consolidating super is often a good idea, but the downside can be losing any insurance cover you have in the account you close. If you've been diagnosed with Parkinson's, you may want to keep as much insurance cover as possible, so consolidating super accounts may not be the best thing for you. This is something you should talk to your financial advisor about. People also have insurance policies outside of their super. This is often called retail insurance. You may have a retail insurance policy where you pay an annual or even monthly premium to an insurer, usually direct debited or via credit card. Again, it's important to dig out all your paperwork to see what type and amount of cover your policy includes. When your insurance cover is part of your super account, you have to apply to the super fund for them to release the insurance benefits you've claimed. To be paid the cash, you'll have to meet a condition of release in relation to your degree of incapacity. Ideally, you should have 4 different kinds of insurance cover. The first type of cover, and the most common, is death cover. This pays a lump sum upon your death to the people you nominate in your estate. Another common type of insurance cover is TPD. This covers you in the event you become totally and permanently disabled. We'll come back to TPD a little later. Another important type of insurance many people have is what's called trauma cover. This cover applies if you should suffer a serious and increasingly common medical event like cancer, a heart attack, or a stroke. The fourth kind of insurance cover is called income protection insurance. This cover generally pays you 75% of your usual income if you're ill or injured and can't work for an extended period of time. Some policies allow you to have income protection up to age 65. This sounds like a lot of insurance, but each one covers you for a different type of event. Most people have an insurance policy for death cover and TPD, and these can be automatic, as I mentioned before, as part of your super. Check with your super fund or speak to a financial advisor about the level of cover you have or don't have. If you have a partner, you should also check what cover they have and how much. It's one thing to be dealing with significant change to your work and life, but should your partner become seriously ill or injured, it could be a disaster, both emotionally and financially. Talk to your partner about their insurance and seek some advice about whether this is adequate for you and your overall circumstances. TPD, or totally and permanently disabled insurance, is something people diagnosed with Parkinson's are eligible to claim for, assuming TPD is included in their insurance policy. To make a claim, you need to provide medical evidence to your insurer. It can take some time for your claim to be processed. In some cases, it can be months. If your claim is approved, the insurer will ask whether you want your payments made in cash or rolled over into your superannuation account. This decision depends on your personal financial circumstances. For some people, it will be better to have the cash and deposit this wisely, or even pay off a debt. For others, their super might be a better option. This is something you should really discuss with a financial advisor. If, as I've mentioned earlier, you have insurance inside your super account, you won't immediately receive your payout. The trustee of the super fund will hold on to your benefit until you've satisfied what's called a condition of release. Only then will you have access to your cash payout. You should also be aware that not all TPD claims will meet the definition of permanent incapacity under superannuation law. Check with your super fund or talk to a financial advisor to clarify your individual situation. To qualify for a TPD claim, you must meet the insurer's definition of TPD and have become totally and permanently disabled while you're insured with them. The definition will be set out in your insurance policy and will generally require you to have been seriously injured or become ill to the extent that you're unlikely to ever be able to return to work. This includes in your usual occupation or any other work for which you could be considered qualified to do. If you've been continuously absent from work as a result of being diagnosed with Parkinson's disease, you meet a prescribed medical condition under TPD. So, if you have TPD cover and you haven't yet reached 65, you can make a claim. This applies not only to someone who was in paid employment before being diagnosed with Parkinson's, but also if you've been doing full-time unpaid domestic duties. There can be limitations placed on insurance policies when people have what's called pre-existing medical conditions. You can apply for extra cover, but your insurer will ask you for details about your existing medical condition before approving this. You will need to disclose that you have been diagnosed with Parkinson's, and they will take this into account in your application. If you then make a claim down the track and this is medically linked to your pre-existing Parkinson's condition, you will not receive a payout. Insurance can be a complex issue, especially if it's been a while since you've looked at your policies. You may find that you have some insurance cover but didn't know this because it was part of your super fund. It's important that you understand whether you're eligible to make a claim and to get this moving as soon as you can. It's also a good idea to seek some advice from a qualified professional. My name is Scott Brower and I'm with Outlook Financial Solutions. Thank you for listening.